Welcome to another exciting episode of our biweekly webinar, hosted by Dr. Adebayo Fasanya and Dr. George Ozoude. Today, we have a remarkable guest who is not only a board-certified emergency physician in Dallas, Texas, but also a visionary entrepreneur who is making waves in the world of real estate investing. Dr. Shameem Nazeer has been practicing emergency medicine for an impressive 23 years, and her passion for helping others extends beyond the walls of the emergency room. In 2021, Dr. Nazeer embarked on a new journey that has transformed her life and the lives of many physicians. She recognized the importance of financial empowerment for medical professionals and decided to take action. The result? The birth of the Doctor Investor, a company dedicated to empowering physicians to take control of their financial futures through the world of real estate investing. In today's episode, we'll delve into Dr. Shameem Nazeer's inspiring journey, her mission to empower fellow physicians, and the incredible impact the Doctor Investor is having on the world of real estate investing, and also learn about fund of funds. So sit back, relax, and get ready to be inspired by the incredible story of Dr. Nazeer and the exciting world of physician-led real estate investment. Let's dive in.
Single family homes. And then I obviously learned through my research that commercial real estate had a better potential for appreciation and equity growth long term and could be more passive. And so that's when I started looking into syndications and got involved with raising capital for a group locally. And I did that. It was my first run. It didn't do great, but after that started becoming more like an idea to develop the company. And then what happened through further research and networking is we were approached by a developer out of Austin to raise capital for their project. And interestingly, this particular deal, it sounded great, but he didn't have the typical co-sponsorship model that I was seeing a lot of other people do. He was the only GP. And so really the only way to participate was to create a fund of funds. And so that's how I got started, really. It wasn't like a grand scheme to go that route. I was thinking about it, and I had done a lot of research in going that route or going through the fund of funds rather than a co-sponsorship, but I wasn't sure. And then this opportunity came up, and that kind of pushed us in that direction. And so it was a couple of the really great things about it for me is that I don't have to look for properties. I'm not busy doing due diligence or taking on the legal or financial liability of becoming an owner. And so that was great. And then also I could be, I didn't have to specialize in a particular asset class. I could leverage the expertise of the sponsor in that asset. If the deal looked good to me and the numbers worked, it could be multifamily, it could be a development. And so I didn't have to build a track record in a particular asset class. And I think that's also a great feature of doing the fund of funds. Obviously, and then I could continue practicing my regular job. I didn't have to do asset management or go seek the property. What I needed to do is find a really good top operator sponsor that I could trust and leverage and partner with. So I think those were reasons why I found it to be a really good model. And then the other thing is that they were the other reason that it really worked out well is that we had a fund administrator, and the sponsor was already using a fund administrator, and because they were doing so much volume with this particular developer, they took us on almost at very low charge. So usually a fund administrator is an expensive thing to have, but we got them at a very low cost to us. And that also really helped me just be more involved in networking and educating my investors and not having to do the back office filings with the SEC or the paperwork, and also not having to manage the asset and just being available to investors to tell them about the deal and educate them on real estate and syndications and things like that. So I think that was why it really was very good for me. And then obviously the big costs with doing a fund of funds is first of all, it is a syndication within a syndication. So you're creating an LLC, and you have to have a PPM, an operating agreement, all of those things like you would for a syndication. And basically, investors are investing in that syndication or LLC, which is your fund. And then that fund invests, or that LLC is the limited partner in the bigger deal. Or in this case, like my LLC is a limited partner in this developer's deal. So that's how it works. And there is a limitation, like you can only have, for instance, there are certain SEC exclusions that you have to meet, which means that I can only have 99 investors in my fund, or it's like a limit of 100 and you're one, so it's 99 investors. And so you have to be somewhat careful with those kind of stipulations. But other than that, it just works like a regular syndication. I'm the managing partner of the LLC, or the general partner, and the investors are limited partners in my LLC, and then my LLC is a limited partner in the bigger deal. So that's just how it works. It's not that different than what you know of a syndication.
Okay,
Mhm.
thanks for that. If you have any questions, you can put it into the chat, and then we're gonna go over it. One of the things that concerns me the most is, for example, everybody raise funds, right? So a lot of people raise funds, and there's this very borderline situation where, let's say you have a deal and you have 500K left to raise, and you call me last minute, like, hey, can you raise this money? And I raise it for you. Like my CPA, my lawyers keep said it's very borderline in terms of the regulations, SEC, right? So is that like one of the reasons why you decided also like fund of funds versus just raising directly? Or
So,
have you heard about that before?
yeah, I think, are you referring to the fact that you
Can't
cannot
get
only
compensated.
raise capital?
Yeah.
Yeah, so your investor relations on the GP team is what you're
Yes.
doing. Yeah, and I think that's okay. I think that's what a lot of people do, and I think that's how you get around the legal requirements. I think what's nice about the fund of funds is that I'm not partnering with anybody on the GP team, and I get to be completely independent financially and legally. And I really like that about it, because I think my first experience as a co-sponsor was not that great. And there was a lot going on within the GP team that I didn't expect, just some politics, and people were breaking off and different things were happening. And I was like, "Oh, wow." I didn't expect any of that. I was thinking this was like a really stable team. And I was coming in somewhat as a new person, thinking, "Okay, I'll raise capital, I'll be on the GP team. This is great." But then you're really like intermingling with people that perhaps you don't really know very well. It's wonderful if you've worked with them before and you've invested with them before and you have a history. But when you're starting out, you really don't have that history with anybody. And so you're basically partnering with people you have very little information on, or history with. So with the fund of funds, you don't have to do that at all. I'm completely my own entity legally and financially. Like, I'm only a limited partner, so I'm not having to get entangled with any of whatever politics might be going on a GP team, or whatever else is going on. So it's really nice and clean that way. And so that is one of the things that I liked about it. I didn't really think about it, because there is still, as far as I think, the co-sponsorship model is still legal as far as I know. It's not necessarily a problem, as long as you're doing some other tasks for the GP team, that it's still an acceptable model. And it's less expensive, and it's potentially could be more lucrative depending on what the water flows are for, or what the profit sharing is for the GP team. But in doing a fund of funds could be more expensive, because you've got to create your own PPM and that sort of thing. But it is a little bit cleaner from my standpoint. Like, I don't have to partner with anyone to do this.
Obviously, you're still gonna be intermingled still, because if you raise money for someone and then
Yeah.
the deal goes,
Yeah, no,
negative,
you're
or
absolutely right. That's true. Like, that you're really not off the hook completely, but it's
the investors
so
are still gonna
you're
come up
right.
to you and ask questions.
Yes,
But
they will come to me.
yeah, but legally, yes, you're right that you
Yeah.
got yourself in a way, you're not going down with the ship.
Completely, at least.
So
Yeah,
okay.
and I think that the other good thing about, at least for me, like I know I've heard some people say that who, maybe these top operators really don't need capital, but I've been approached by many people or many groups or companies to raise capital for them. And I think if you're raising capital, you're still a desired partner. And I think that if we can just, it's nicer because in a way that I can just specialize in raising capital as opposed to trying to specialize in an asset class, learning to acquire deals, developing relations with brokers and lenders and all these other tasks that are required to become an owner operator. This is a little bit more simplified. I'm simply building a network, an investor base, raising capital, educating my investors. So I'm really like specializing in one aspect of real estate investing. So that's nice. And yeah, you're right. They will come to me. But what I was going to say is that if you find good operators and partner with them, people who do have a track record and all of that, then you're probably a little safer, I guess I would say, rather than maybe if I went to go find my own deal and created my own operation and then said, hey, invest with me. Like I don't have much of a track record or specialization in that. But if I go to someone who's been doing it for 10, 15 years and has a great track record, and I'm saying, yeah, I'm raising capital for that group that's been around 10, 20 years and has done well, that part I think is what's nice about it. And I can just focus on raising capital. So I do like that about it. Yeah. And what else was I going to say?
Thanks for that. So I see some of here. Let's see. As an investor, let me be sure. What is the first one? Sorry. What is the fee structure of the fund of funds? Just the typical. Obviously, it's going to be different for different ones.
Yeah. Yeah, I mean, it's not that different than creating a syndication. So a lot of times you could do like an 80-20 profit share. You can do a 1% management fee, 1% acquisition fee. Those kinds of things are pretty standard. I actually didn't do that on my first fund. I didn't take an acquisition fee or a management fee. So our profits are simply on the back end at the profit share. But yeah, it's simply, yeah, same idea. You could break it up just like a syndication. Obviously, there wouldn't be much for asset management or all those kinds of things, but you could still charge for managing the fund.
Okay.
And you should probably, because it costs money. It does cost money to have the fund administrator in place and things like that. So
that's what I wanted to go. Like, I'm going to expand on that a little bit. So as an investor, for example, what is the difference between me investing directly? Because now you are going to tack on even more cost while you're trying to be like a fund manager versus if I just invest. We are owner operator. I do raise funds also for other people, but we also, operate our own deals. So so I kind of be on both sides of the equation. But I'm just wondering, so how do you make it so that it's enough to cover your cost at the same time, give you some profit at the same time, either the same deal as the operator or slightly better, right? Why should I come to you versus go directly?
Yeah, that's a great question. And actually, I'm so glad you brought it up because I forgot to mention that. One of the real advantages of being a capital raiser or fund like this is that you can leverage the fact that you have the funds. And so what we did is when this developer approached us about raising capital, I said, well, if I'm going to bring $1 million plus, I want enhanced economics. And of course, I stole all that from Hunter Thompson. I only watched his free course. So if you guys want to check it out, just a plug for him, not that I'm affiliated, but anyhow, if you're bringing $1 million plus, you can argue that you should get better treatment. And so this developer, for instance, he had a 50-50 profit share, 50% to the developer and 50% to investors. And so we got a 70-30 profit share. So we get 70% instead of 50%. So my margin is coming out of that 70%. And I really wanted to be as generous as possible and make this a win situation. So I did 85-15 on my end for my company. So it would be like out of that 70%, my investors are getting 85% of that. So in essence, they will get a better profit share if they come through my company than if they were to go to the developer directly. So that's something you can create to make it an advantage to your investors.
Okay, that's definitely a consideration. We've been thinking about funds for a while. Okay, let's see. As an investor, I think it's the same question. What are the pros and cons investing via a fund of fund versus investing in the deal directly? So you just expand on that.
Yeah, I think again, it's if you can go find your own deals to invest in, certainly. Like if you want to go research and find the developers or find the deals and you have the time and expertise to do that's in, and if you find that the numbers work for you, that's great. But the whole purpose of creating the fund is that I do that work for you. Like I'm the one that's developing the relations with the developer. I'm going out to the property to see if it exists and everything is as they say it is. And then I'm maintaining that communication and that relationship on behalf of my investors. And I'm getting them a better deal than they would if they had gone to the developer directly. So I think that's the service that the fund is providing, is that we are doing that research and outreach and finding the best deals and ensuring that our investors get an advantage to investing through us. And then on the back end, we have follow-up and updates and getting your K1s, whatever else that needs to happen. We're in charge of that for our investors, just as you would if you were a co-sponsor on a deal. And so it's really leveraging the numbers when you are part of a fund. So if I were to go directly to this developer with 50,000 as opposed to 1 million, he doesn't, first of all, some deals, they don't even want 50,000, right? Like some of these large deals, the minimum investment is 250,000. So that's another reason why you would want to participate in a fund, is probably most likely we would be able to access these really exclusive deals that general retail investors could not access. So if their minimum is 250, most retail investors are not going to want to put all that much money. Even if they have that much, they're not going to want to put all of that into one deal unless they have really great history with this particular sponsor. So that's one reason to invest through a fund, that you would have access to these more exclusive deals. And secondly, you have someone that's doing the research and the outreach for you to find the best deals and continue making those relationships. And so that's one thing. And then there was something else I was going to mention, but I've lost it. So I'll wait for your next question.
Okay, keep typing in questions, guys. I see Trevor Thompson from Massive Capital ask us questions. So we got someone. Do we get all the same tax benefit if we go through the fund of funds?
Yes, it's completely a pass-through vehicle, essentially. So you would have all the benefits of ownership. You're still an investor in the actual deal. And in ours, like the way we did it, it's a special purpose fund. It's not a blind fund. We're not just asking for investment money to potentially purchase a property. We have a specific property that's already been identified, and we have, that is what we're passing on to the investor. So any investment in that is like direct ownership, just like you would be in a syndication.
That is one of the things I was going to ask. I mean, the blind fund, we're actually looking into that because we do multiple different assets. And I always imagine it's going to be advantageous to some people because it's more diversified, right? So instead of having one property, you have 5 properties in the fund. And also, instead of just having in some fund, you can just be like, you can have value add, then multifamily, right? If you just make it a broad multifamily, or you can make it, sorry, a value add or development, together. So that one of them give you equity, one of them give you cash flow. So I always want it that way. But special purpose, it looks to me that it's good for people that are anxious. Most of our investors are always worried about funds, So that's what I'm thinking. And also, I will follow that up with the fact that is it harder to raise money for a fund versus syndication? Because for us, we have a deal, we present the deal because we actually are the operator most of the time. So we have the deal, we present it to the investor, they look at the PowerPoint, and then we actually directly can show them all the materials. We know 100% everything we're talking about, right? Versus if you're raising for somebody else, you have to get somebody, you have to say, oh, hold on a minute, let me ask them some questions.
Mhm.
So do you think it's easier? You have not operated before, but I'm just wondering if you feel like it's harder to raise with funds. Just even the word funds scare some people.
No, I totally understand what you're saying. And I have had that question. So you're not on the sponsorship team, so you don't have the direct insight into the deal. And that could be true. I think our particular sponsor has been really forthcoming. And I think we haven't had a problem with that. If we ever had any questions about the deal, they were very forthcoming. And the other really great thing that we had that also helped bring that kind of information that any investor required is that this particular sponsor has a fund administrator and an auditor. All their financials are audited. This fund administration, it also keeps track of all their legal compliance and everything else. So we had a lot of trust in their process already. And so that was helpful. And then I think what you're saying is, yeah, if it were a fund where we didn't have a prominent sponsor or someone with a strong track record, someone with that degree of transparency and accountability, I think it would be difficult. We haven't had too much of a problem. And I think the kind of deals that we had, fortunately, through this particular sponsor were really attractive. It was very easy to see the value and it was very easy to research the sponsor, so we didn't have that difficulty.
Okay.
Yeah, but I could see if it could be that. And then also blind fund, I think you'd have to have a really strong track record to show that you could generate the returns that you're projecting for your investors. So that's something I've considered, but I think, maybe after a few years, when I have that kind of track record, I can suggest that. But right now, we're doing just a single purpose fund, which is for a specific property.
That also solved the problem that I see in many funds, right? So you have to have a deal flow, like a lot of deal flow. Like, for example, we had a deal in April and we didn't have any other deal till December, right? So if you have a regular fund and people put money into the fund, then they will expect the return nevertheless. So you need to have that kind of deal flow to be like, there's deal all the time. And the money you are also going to have the pressure of deploying the funds, and I don't want to have that pressure. But it looks like fund of funds and special purpose one is just for that deal itself. And then so I like it.
But what you could do, Adebayo, if you are in that situation, you don't ask for them to fund their investment. You get soft commits. And then when that property becomes available, you can ask them to transfer the funds so that you're not like holding their money in that. So since you're worried about that is a real problem when you have a blind fund, is that you're going to be holding people's money potentially indefinitely until you find the right deal. But you don't have to actually do that. You can just have the soft commits. And then once that property becomes available or is identified, then you can receive the funds.
But then
so that might be a way to.
That almost like syndication again, because you can't force people. So if
they can be. I think there is a way to make the commitment stronger so that when you are ready, they do need to follow through. But yeah, you'd have to. Yeah, that is an issue because but it depends. If you're somebody who's always buying and you're in that market and I think it's a great idea to have the blind fund because you're right. One of the biggest problems is you're under so much pressure once you've identified the property and you've done the due diligence and now you've got closing ahead of you. There's a lot more pressure to raise that capital. So if you can have that done ahead of time or at least have the commitment ahead of time, it's a lot nicer when you go shopping for your properties.
Yeah, I also believe that with the banks, you probably get better kind of communication and preference. Like they treat you better if you say, "Oh, I have a fund."
Yeah.
Versus, "Oh, we're waiting. We're just gonna have to raise the money."
Yeah, I think that's one of the reasons why I think a lot of people reach out to me. Different companies will reach out to me. I think they think we have a blind fund, but we don't. And so I always have to remind them that yes, we are raising through a fund of funds, but at this point, it's a special purpose fund. It's for a single deal, and we're happy to do it for others too. If a great operator comes and says, "Hey, we've got a great deal we'd like to partner with you on," that's certainly doable. But we have to obviously create a new LLC specifically for that. And the other thing I wanted to point out, like really just the fund administration is also a wonderful thing that we got to take advantage of, because they are like a full back office that keeps us completely compliant and transparent and accountable. They're wonderful, and really just gave our investors a really professional experience to be able to work with them. So that was really nice. And that's a hard thing to have. It's expensive. And we were able to do that only because this particular fund administrator was already working with this developer. But I would definitely want to continue with them going forward. So we're in talks, like if I do another deal with even a different operator, we're going to try to use the same fund administrator so we can keep it all under that same umbrella and continue to use their services, because they've been really great.
Yeah, I like the idea of audits. The fact that the fund administrator, the fund has a higher burden of audit, right? Like SEC,
Yeah.
kind of keep a closer eyes. What do you think about that? The SEC implication of it. Do you feel pressured as being a fund manager?
No, I think primarily I don't feel pressure because I have a fund administrator. They are the ones that are filling out the paperwork, making sure the investors check all the right boxes, and then they do the filings, the blue sky filings, the this filings, whichever, for the SEC, for me. So I know it's being done correctly. And that's one of the biggest things, I think, like being a full-time physician and doing real estate investing, as you know, it's a big job, and I didn't expect it to be this much else, peripheral activity around it. I thought I was going to learn about real estate and about how to invest in real estate, but there's a lot of things that we have to keep up with. So having a full-time fund administrator behind the scenes that's managing it all has been really awesome. And that's why I'm not worried, because if I had to do all that by myself and have to remember what to file when, I think I would be scared. And you can do it yourself if you have the knowledge and the time to do that. I think it's certainly, you don't have to have a fund administrator, but it's been really great for me to have that backup.
Yeah,
So.
yeah, absolutely. For syndication, we pay sometimes up to $20,000, $25,000 just to get all these blue sky fees. But we have a CPA, right, that does all this, and a lawyer. Together between the two of them, they figure it out. But I think the audits, the fund administrator, I like it. I like the idea. So let's get to one of the things that many people are probably looking for today. So do you have a step-by-step process? Let's say because as you know, you're part of our group, which we have an investor relations group, a WhatsApp group where we have 26 of us, which kind of share opinions and try to raise money. Let's say there's someone else that wants to join or wants to learn how to raise funds or want to be a fund to do a fund of funds. So how would they get started? What do they have to do? What do you have to have in place? Do you have to have a following already, or do you have to build it from scratch? How do we start?
I got lucky because I had this fund administrator. Because honestly, you've got to obviously create your LLC, and then you've got to create a PPM. You've got to do everything you would do for a syndication, basically. So that part is, and then do all the same things. Basically, you're creating a syndication from scratch. So you'd have to create your LLC, your PPM, your operating agreement, your investor portal, all of those things, just like you would for a syndication. So the nice thing is, when I got the fund administrator, they had a PPM I could use and have my lawyer review. So they created the portal for me. They created some of the marketing materials for me. And then most of what I do is I present the deal to investors. I talk to them, I educate them on the deal and what is a syndication, what they're going to get. And then I connect them with the fund administrator. And the fund administrator gets all the documents filled out online and tells them where to transfer the money. All of that gets handled on that by them. But I think it's a really great way for physicians or other professionals who might be busy and want to get started in real estate investing and want to protect themselves legally. it's probably better to create a fund of funds and participate in the deal as a limited partner. And then just make sure that the numbers work, that can you cover your costs and still provide decent returns to your investors. I think that's the other thing to make sure. But the process is about the same. You'd have to speak to an attorney, get the PPM, create an LLC, make a bank account, investor portal, all the usual stuff.
Okay. I'm going to reiterate the question a little bit. So let's say I'm not an operator, a regular novice, complete novice, and here I am, and I said, Dr. Shameem, I want to be a capital raiser. I want to do a fund of funds. So what do I do? How do I get started?
Where do you get started? I think there's probably a lot of places to get started. I think number one, you need to create your investor base, right? I think you would need the investor base, and then you would need the operators. So you'd have to really just do a lot of networking, I think, to start creating relationships with operators. And the way you would do that is tough. You'd have to, first of all, find them and find out which ones are the better ones to work with, and then reach out to them and say, hey, if I bring you $1 million plus, or 500,000, would you offer enhanced economics and things like that? And you find someone who is willing to work with you. And not everybody is, like, they may not want to take you on as a partner, but let's say there will be some that will say, yeah, sure, that sounds like a reasonable thing. If you can bring us a large investment, we can perhaps give you better terms. So then you have potential operators, and then you need to have an investor base. So you basically, whoever you already know, and then do what we do, marketing and social media, everything else, to outreach and educate people about what you're doing. And yeah, it's just like anything else. It takes a lot of scratching and working. Yeah, I don't know that there's like a simple 1, 2, 3 step. Like, you're going to have to basically do what anybody would do. The only thing you don't have to do is find the property or do the due diligence or financing or any of that. You don't have to manage the asset, but everything aside from that, which is involved in any big deal, is first finding the deals and finding the investors and creating the structure of the company. You still have to do that.
Yeah. Yep. Okay. So that answers it. Also, yes, you're right. Like for me, it started as like a side gig, like completely. I was investing. I bought my own 8 units, then another 8 units, 3 units. I was just buying. And then some people would join me like joint venture. So that's kind of just become I just, enjoy operating. But I feel like each part of the real estate syndication is a whole business of its own. And being an operator, you're right, it's a lot of work because finding the deal itself, there are commercial brokers, right? There are people that is their job only. Underwriting, that is some people, that's all they do all their life, just underwriting. Their capital raising is a separate business. And then asset management is a separate business of its own. Then even property management is separate business. So it's almost like you're running 5 separate businesses in one.
Yeah.
So it
Yeah, I
is.
think that's exactly what I was noticing as I started looking into it. I was like, there's no way. I'm not going to be able to do that many different things and do it. I think, obviously, as commercial real estate is a team sport, nobody's doing this alone. It's about creating the team and figuring out which part of the team you want to play on, or you be the coach and put all the players together. So I think we're always working as a team, no matter how we do it. But that's the beauty of just raising capital. And that's why it appealed to me, was like, I didn't have to make those relations with the brokers or acquire properties or do the due diligence, the underwriting, the financing, the asset management, the property management. There's so many other things, like you mentioned. What I do is raise capital, which I would have probably done mostly anyway if I was a co-sponsor, right? So I am building the capital raising machine, or part of that. And so I can plug myself into a great deal because I'm bringing my network and my capital raising ability and my infrastructure that I've created just for capital raising. And I can partner with somebody who's got the rest of the infrastructure. So
Yeah,
that's
that
really been
definitely
great.
helps. Yeah, that definitely helps in that of that. I have a few more there are a few more questions here, but I just wanted to finish this line of thought. So another part of it, I say, like when you say asset management, that's one thing I can't do. Even when I raise money for other people, I want to sit on the every week. I want to meet with them, and maybe it's control part of my brain. I want to every hour, like literally, I meet with the asset management team every week on every deal. I want to be in the meeting. I want to get the reports. So it's almost like I'm also being an operator. So it defeats the purpose sometimes because then I'm doing the almost asset managing it with them again. How do you feel? How do you sleep at night? I guess your main is to do the due diligence on the sponsor so that you don't do you trust them enough. But I just still wonder how you're able to be okay.
Yeah, I think that's a great question. And like I said, my first syndication experience was not a good one. So I understand how you feel. And I think the key is really, again, I'm leveraging my numbers. Like I'm saying, hey, I'm going to bring you $1 million. And so I don't want to deal with people who don't have their act together. Like we're going to deal with just top operators who really have a strong track record and have that degree of transparency and accountability. And we think they've got a great operation, then we're going to partner with them. Otherwise, because we really don't need to, right? Because I'm not facing a closing. I'm not facing any risk on my own. I can just do nothing. Or I can partner with, I have the choice to partner with who I want to partner with. So that's nice. But yeah, I think that's the only reason I can sleep at night is because, first of all, the sponsor we have, honestly, he's an attorney and a member of the bar. He has institutional investors. And we actually had one of their institutional investors introduce him on our first webinar. And he has a strong track record. He's also very public about his life and his own philosophy and things like that. I felt very comfortable like partnering with him for those reasons. If somebody has institutional investors, they've probably got enough, they check a lot of boxes. And then the fund administrator and their auditing, all of that stuff was auditing their financials and things like that was, I think, also very reassuring to me. And nothing is 100%, but I felt, wow, no, this is somebody I can raise money for. You can't do it for everyone. So I think, but yeah, I agree with you. I think it is risky. Anytime we invest, you have to trust somebody when you're doing any kind of business. Like even if you are on the sponsorship team, there is still a level of trust. But you do the best you can and do your due diligence on the sponsor. And that's the other, again, like when we're talking about the amount of research and tasks that we have as real estate investors, I only really have to do due diligence on the sponsor and their processes rather than the real estate itself or multiple other things. I can focus on that.
Okay, that answers my question. So let's go back to our guest. So how do you justify being compensated as a capital raiser with fund of funds and meet SEC regulations, if not directly involved in the due diligence, asset management, etc.?
Yeah, I don't get any asset management, but basically the fund management is really like covering expenses. I think you could do maybe 1% or something. And again, like I didn't take any on my fund and I didn't take any acquisition fees. It's really to cover the cost, like, right, when you're even acquiring a property, there's so much upfront cost in the due diligence and the legal and everything else. That's really what that percentage is covering. It's not really the larger portion of your earnings. Most of your earnings are going to come at the end when you exit the deal. But that's the justification, is a process. There is still upfront costs, like hiring the fund administrator, creating the PPM, my networking or advertising or reaching out to investors, or maybe going out to the property to do my due diligence on the property, of course, right? Because it's my investment. Even if I'm an LP, I should do some due diligence on the investment. So there is still all of those activities. So that's why it's justified.
Yeah. So I find you. So we actually, me and George, we, ruminated over this because George is mostly into capital raising also. And so we finally broke it down into three ways you can raise funds. One is to get that the license, okay, to raise capital. So that is the ultimate number one. That it's nobody will ever has questions, but it requires a lot. You have to do some exam. There's a lot of regulations. There are things you cannot say. There's things you can say. It's very much more regulated by the SEC. So it's going to be tougher. You can let you add to that, Trevor or Shameem, about that if you need a license to do it. Then the next is fund of funds. Then, which is the next level, which I feel like it's also more secure in that you just have your funds and you invested, as the LP. And then whatever this decision, the split, that was given is gonna be decided. And you still have to do it in such a way that you're not like, oh, I'm raising 1 million, then I'm raising 1.5 million now, and then you have to increase my compensation now because I raised a little bit more. So there's something about that you could not be compensated exactly by how much exactly you raised. So that's where the problem lies. So you have to basically talk to your CPA, fund administrator, and just say it in a very legal ways, everything you do, and document it in that kind of manner. So I'll let you add to it. And I think Trevor, I recognize him. If you have something to add to that part of it.
I don't know a lot about that side of it, to be honest, because I'm direct capital raiser, GP position on management teams. So that's part why other than two out of three of my favorite doctors are here. So I just really came to learn myself.
Okay, good. Thanks.
Yeah, no, I think you're right. You can't be compensated for capital raising alone as a percentage, especially. It has to be in the operating agreement ahead of time, and you're a co-sponsor, and you're also responsible for investor relations. And even with the fund of funds, there are some limitations. Like I said, you can only have up to 100 investors in your fund of funds, or up to 5 million, I believe, is the limit. And then, so if you're going beyond that, then you do have to get into more of the SEC requirements and qualify that company differently.
Yeah, and then SEC is an organization you don't want to play around with.
Yeah,
So
exactly. And that's the other
sure.
reason I'm super happy that I have this fund administrator, because like even any of my marketing, like if I'm sending out an email, we actually upload it to the fund administrator's portal, and they like redline things that I have to take out or say differently. So that's been really helpful because again, yeah, it's a whole nother world, right? And we're really good at medicine and we know how to practice medicine, but as far as like all these other regulations and things, we don't really know that. So it's really helpful to have either legal advice, like you mentioned, a CPA, or a fund administrator who can advise you on all the activities, because yeah, we have to be very careful even what we put up in, if it's like mine's is a 506B fund, and you don't want to advertise incorrectly or post too much or do anything incorrectly. So we clear everything through them before we even post anything.
Yeah, there's a lot of, we're doing more 506C now. If it's going to be B, we just do joint venture because for the B, you cannot advertise and it's so much what you can say. You can't say the numbers, the pictures where you post it. You have to do it as a passerby. Anyways, it's not. It makes it very.
Yeah, people are probably thinking we're being very like elusive, but it's true. Yeah, it's because you can't.
I don't know. It makes me, because I post something that you're right. My lawyer will find it. I will be like, take it down. I was like, oh. So,
yeah, it's like HIPAA, right?
Yeah. So
you never know. You don't want to say too much. Yeah.
So just we follow the laws. How did you find your fund administrator?
Oh my God. Like I said, I've just been so blessed. I can't even tell you like this. So the reason we even have this fund administrator is because the sponsor suggested it. He said, Shameem, if you're going to do this, and he said, I started the same way as you did. I started with capital raising, but if you want to do this, you need to get a fund administrator in place. So he introduced us to this fund administrator. And they've been amazing. Yeah, but there are several, and I'm happy to share with you guys if you want to meet ours, but they've been really great. So yeah, that's how I found them. And I have since heard of other companies as well. So I know there are others that are probably good too.
Oh yeah, I was going to ask you about, with this one we've been trying to talk to. I'm not trying to give them a plug, but Avesta. They've reached out and I've been talking to them for a while, and they do a fund of funds, and then they manage it on the same portal. Investors can invest there. You can advertise to other people there, and then you have to pay some certain fees. That's what actually dissuaded me. There's so much fees like I have to pay that it's worse than doing a syndication. So I'm like, so what do you think about those kind of platforms? Do you know about it?
Yeah, I haven't talked to Avester, but ours is called Industry FinTech. That's the fund administrator we use. And yeah, they are expensive. I think they normally charge about 2,500 a month. And I don't have the breakdown of what all that entails, but they are honestly, it's much, it's a peace of mind for me. Literally, it's peace of mind. And it's just part of the cost of running a business. And I have a full back office because of them. And if investors have any questions about the PPM, about where do they create an IRA, how do they transfer funds, or different types of retirement accounts, different types of trusts or entities or whatever, they have answers to those questions. And I don't think I would have been able to do what I'm doing without them. So and I get it, it's expensive. And again, the only reason, again, I'm using them is because it came with the project. Essentially, they covered most of my costs because they already work with this developer and they are doing so much volume for him that they were like, if you're going to be raising for so-and-so, then we'll give you a break and charge you a whole lot less. So that's how it worked out.
Okay. So if
Yeah.
you don't mind typing it into the chat, so for people to see the company.
Oh
And
yeah,
then,
sure.
so also, before I forget, there are someone who raised up their hand. Ife, I think you wanted to talk. Come on.
Yeah, I had. Yeah, hey, Bayo Tiffany. Hey, can you hear me?
Yes.
Yes.
Yes, we can hear you.
Okay. Yeah, I had raised my hand, but I'm going backwards, I guess. Regarding the SEC regulations, my understanding by what you both are saying is that if you are doing fund of funds, that by using some of the legal jargon, that you are raising capital, but yet you're not involved in the actual deal and you're being compensated. Let's say you were able to strike a deal where they give you, instead of giving their investors a 70-30 split, and you are given, say, you're getting more sort of a 10% to 90% split, that when you get compensated as the fund manager, and you're not particularly involved with the deal, that according to the SEC, that's allowed or that's not breaching the agreement. Is that my understanding of what you're saying with fund of funds?
You're not getting deal management or asset management fees. You're getting fund management fees. So that's why it's a totally separate. It's just as if you were getting a percentage for managing the property, you're getting a percentage for managing the fund itself, which is this, like investor relations and fund administration, like just what I'm talking about, like filing the paperwork or whatever it is. That's what your job is. And so my LLC is just that. That's all we're doing. So we're not really, so what I'm trying to say is that we're not really under the SEC requirements for the real estate investment syndication per se. We are a syndication of other sorts, right? We're just a fund. If I'm answering your question, maybe you should say it again.
Yeah, no, I think you're
lost.
going along with it. No, I think you're going along with that. Okay. And if you're doing that, even though you're doing that, then you also are not using a license to do that, so that it's essentially, isn't it essentially that you're selling securities to the investors by using it as a fund of funds? And are you having to obtain a license to then allow you to sell securities without then breaching the regulations with the
No.
SECs?
Yeah, so it is a security, but you are limited. So I forget the exact law, but there is, again, like we have certain stipulations in the securities laws. You I think it's 3C1 or something like that. See, I'm getting the words wrong, but there is an
Sure.
exemption
Yes, thank you.
for if you are under 100 investors and under 5 million,
5 million.
you
Okay.
can meet that exemption.
Got it. Okay. All right. That helps.
Obviously, talk to your CPA. We'll always have to say that, and your lawyer, right?
Yeah, I'm
SEC
not.
lawyers. We actually have some,
I should have probably prepared the slides and details about the legal implications of that.
Yeah, we always say that, and also
Disclaimer.
The
also
disclaimers,
part
yeah.
of our, you're part
I'm
of
a
our
doctor.
WhatsApp group.
Don't take my legal advice. Exactly right.
So just ask anytime in the group, and I will be able to answer you. I think Shameem is in the group too. If not, I'll add her. And if you have any questions, just ask us. We need a C lawyer. We have one that we talk to all the time. Trevor?
So on the 100 investors and 5 million, is that per offering? Or in other words, are you going to max out once you did 5 deals of $1 million each?
No, I think it's per fund.
That's
Yeah.
what I
So
thought, but I
you could
wasn't
create
sure.
multiple funds theoretically. Yeah.
Yeah.
Thank you.
So because you start a new vehicle, right? For a new deal. So that's a rule.
Yeah. It'd be
So you
new
start it all
PPM,
over.
new
So,
LLC. That's
so
right.
the requirements gone with that one. So you start a new company, right? Every time. A new fund of funds. So so that allows you to do multiple in a year. So there's a last question I'm going to cover. And, in the interest of everyone's time, we're going to be rounding up. Who covers the blue sky cost? Is it the fund or the syndicator?
You can arrange it such that then they're paying for it, I guess, eventually. But like in my case, the fund administrator is in charge of that. So I'm not paying the blue sky fees the fund administrator is paying, but I'm paying the fund administrator. So it all works out. So that's partly,
Essentially,
sorry.
You are paying the blue sky fees.
Yes, essentially, yeah. But like we talked about, like the developer was giving a 50-50 split, and then they're giving us a 70-30 split. So essentially all of those fees are coming through the developer. So that's how we can make the math work.
Yeah. So basically what I'm getting from everything you're saying is you just have to be a very good negotiator to be able to make a fund work, right?
Yeah, to make all of this work, we have to be good negotiators.
Okay. So I think, in the interest of everybody's time. And so thank you very much for coming, Shameem. I really enjoyed it.
Thank you.
I learned a lot myself because I'm still considering a general fund, just like a blind fund or a fund like Harvester, where you can invest in different type of deals, or even a fund of fund for other people's deal, right? Like, for example, we're looking into car wash, and I'm not a car wash person. So if I'm going to do a car wash, I need to, find the operator, right? In that case, and I have to probably do a fund of funds to be able to do that. So I'm just looking into opportunity to do that. In closing, can you share how people can reach out to you?
Yeah,
and if you offer a coaching, a course, or something that people can learn a little bit more about this.
Oh yeah, I'm happy to chat with any of you. So my company is thedoctorinvestor.com, and my battery's dying just in case I fall off.
So
I'll just type in
doctorinvestor.com. Okay.
I'm putting in my email address so you guys have that.
Okay, perfect. So it's gonna be Shameem, SHAMEM at thedoctorinvestor.com. Okay.
Yep.
So, and if you don't get that, you can always email us, text us, and then we'll link you with her. Can't find her. I'm sure you will. She's very prominent on LinkedIn. So
thank you guys. Thank you so much for having me. It was fun.
No problem. We appreciate it. We're going to be closing. Thanks for coming. And in 2 weeks, we're going to be meeting again. Thank you, everyone. Take care.
Bye-bye.